Hello everyone, it is Sterling here from Trading Forex Live, and it is August 29th, 2014. I want to cover really a basic idea in tracking banking activity. If you don't follow Trading Forex Live, our firm belief is that smart money controls the market. That's not really our belief, that's just the statistical fact. If you look at the Wikipedia link that breaks down Forex participants, 80% of the market, it's actually 79% of the market, is controlled by just 10 trading institutions. And if you break that down a little bit smaller, 5 banks control close to 60% of the market. So if somebody owned 60% of a company, would they have the ability to control decisions within that company? Obviously, the answer is yes. If somebody controlled 60% of a stock, do you think it would serve as a benefit for you to know what that person is doing? But think about it the other way. What if somebody owned 60% of that stock and they were dumping their shares and you were buying? Who do you think is going to win that battle? And that really exemplifies what we try to do. What we're saying and what we're really saying with every video we do, every article I put out, is that the movements in the chart mean nothing. The movements in a chart are false. The movements in a chart serve no purpose other than to induce a reaction from the market. The vast majority of the time, a up move is serving the purpose of inducing buying pressure only to snap the price back later, drive the market down, stop all those out that were induced into buying. Remember, if you control the majority of the market, you will struggle to find liquidity. Therefore, this searching out for liquidity, or manipulation as we term it, is not illegal. It's not something that's wrong. It's a basic market function. It happens every day. It will always happen. We will not always be able to trade it and track it every day. But when it does produce those very small windows of opportunity, it's some of the best high risk reward scenarios in this market. And that's what I want to touch on today. I want to point out two specific trades. There was a few others in there, but I want to point out two specific trades, actually maybe three. And it's some recent trades that I covered in the review. And what these trades really exemplify is one question, and that is, if smart money doesn't control the price, then why do we see these repeatable stop runs occurring? And this is a very basic overview. It's one ideology that we have for tracking smart money, and it's really one of the more powerful. So we'll start off with the pound. And remember, I choose manipulation points the night before. So I choose my manipulation points at around this time right here. Now, there was some trades in here. One ended up being a break-even trade. I'm not going to touch on that because that's not really the topic of this video. But those two manipulation points were in there earlier. And again, it produced a break-even trade in there. But we continued through. And what we see happen is we see our final manipulation point that day was 95. Okay, so I selected this point around here where my cursor is. So right around 1 a.m. Eastern is when I select those manipulation points. This is my deepest manipulation point. So the market comes into this point, it creates a stop run just prior to the start of the New York session, and then after the New York session begins, it confirms down, and what we term as a confirmation is essentially our validation for the trade, and then the following candle offers the pullback for the entry to take that trade. This is a beautiful trade. But the question that I really want to pose to you is, okay, here's where the trade was. I just flipped out to the hourly chart from the 15. So why was the market creating this false break above the previous highs? What is happening at that point? So what's happening when the market is doing this? When it's breaking above these previous highs, what's occurring? Well, above that high, you have now induced as much buying pressure as you desire, or as much buying pressure as possible by driving the price to the upside and driving it past 1, 2, 3, 4, 5, 6, 7 plus tests of the same point. You're driving the price past that and snapping the price back. The first point to answer is this intentional? Because if it's intentional, then we have to go to the second question, which is, who has the ability to do this? And the only answer to that question is smart money. So if smart money is in control of the market, that's a pretty serious thing to keep in mind. If smart money's in control of the market and they're searching out liquidity, and we don't know what their searching of liquidity even looks like, we don't know when they're likely to do it, well, then we're in a very dangerous situation. We don't know if when we're buying, we are buying into their manipulation. We don't know if when we're selling, we are selling into their manipulation. That's why I always say there's only two types of traders, because there's only one person that controls this market, or one group of institutions that controls this market, and that is the 10 megabanks. So five of those megabanks control 59% of the daily volume. If they control that much volume, then really there's only going to be two types of traders. There's going to be the type of trader that understands what they're doing and tracks them because they know they control the market and they profit from that manipulation because it's extremely valuable piece of information for the next direction of the market. Or there's a second type of trader that sometimes gets burnt by manipulation, sometimes doesn't, and ends up with a successful trade. But the bottom line is they don't know. They don't know when they're getting into the trade, and they don't know when they got out of the trade who caused that move, who produced that loss, who produced that win. And so what that leads to is very inconsistent results. We're looking for consistency here. So again, what do we see the following day? Well, let's zoom back in, look at another trade, and that trade was a roughly, by the way, it was roughly about 23, 24 pips as an average, because our close was at the 5 p.m. close. We don't carry going into Asia. So anyways, after that day it occurred, right around here, again, 1 o'clock in the morning, I'm choosing the manipulation points for the members. This is all video. You can't go back and edit it. I choose them in advance. I do everything in advance so you can see how to apply the strategy in advance, which is one of the biggest learning tools. And lo and behold, what do we see happen again? Well, the new highs that were created, the market again does what? Aggressively drives into the highs. It creates that big stop run of the highs, and that's what reverses the price. Why is that? Why would that happen multiple days in a row? You go back on your charts and you look at this. This is not a random phenomenon that happens once in a blue moon. You go back on your charts, you watch this, and you look for manipulation around major previous turning points in the market. That's a good indication of a strong potential liquidity point. And you wait for the stop run or the stop run and confirmation out of that point. You now have a very good indication for what smart money is doing. But again, go back, look at your charts. Why does this happen? And so really it points to, again, the fact that this market is controlled. It doesn't matter how large the market is, percentage is percentage. If you control 60% of $1 billion, or you control 60% of $5 trillion, the point is you would still control either of those two markets, a $1 billion market or a $5 trillion market. 60% is 60%. And because the power is in such a very small, select group of institutions, it becomes much easier to drive the market 5, 10, 15 pips to get to an area of liquidity which allows them to either buy into your selling pressure or sell into the buying pressure that's created. The real key here, guys, is when you watch each market move, when you look at a move to the upside and you begin to think, well, maybe I should be buying this move, you need to be asking yourself, is this market manipulation? Is smart money inducing this buying pressure to create that buying liquidity to just snap the price back later? Is smart money creating a down move? Are they creating a falling move to induce the selling pressure, to buy into that selling pressure, to only snap the price back later? There's a reason the vast majority of traders, we hear this over and over. It seems like, and a lot of people say it as a joke, but it's something that happens very often. That is, they say, it seems like the market knows exactly what I enter because that's exactly where the price turns. If they're buying, they can consistently buy a top, and if they're selling, they can consistently sell a bottom. And, it's funny to say it like that, but there's a reason for that. That's not a random act that just happens to occur. The market's not watching you place a trade. It is general market psychology. They know what it takes to get the rest of the market to buy. And if they want to sell, well, then I can assure you they're going to get the rest of the market to buy, or enough to allow them to enter their position. And vice versa, if their desire is to enter a long position. So the key is tracking smart money. That's my belief. That's what we really built Day Trading Forex Live around. Smart money is trackable. And really the key here is The techniques that we used have been formed over the course of years, and we proved it in a live format. That's really the key of Day Trading Forex Live. We don't just say that what we do works. We don't just think it works or it sounds pretty and it looks nice on a chart. We did this every day live for years, and that was the foundation of Day Trading Forex Live. That's what Chad and I built our track record on. And so the more important part, not only did we show it was profitable, but here's the real important part, and that is, can it be taught? And we have many traders who have come from years of failure to producing profit. Now, learning to trade is not easy. I reiterate this all the time, and I try to turn people away. The get rich quickers, the people that think it's easy, the people that feel like they're going to learn in a week to trade, it just doesn't happen that way. But traders that are willing to invest the time, the effort into learning, the education is there, the information is there, and the help is there, but it takes putting forth that effort. It takes putting forth that energy. And if somebody's at that point, then I believe we give them a very good opportunity to produce profit. And our track record of creating profitable traders definitely serves to back up that statement as well. So if you want to learn more, check out daytradingforexlive.com, and ton of information on that site, videos, articles, and you can check out our advanced bank trading course on that site as well. That is going to do it for this video. I will see you all for the next video. Until then, happy trading.